Welcome back. You're still watching Business Morning live on Channels Television. Well, to our next conversation, let's get an update on happenings in the global oil market and the financial market as well. We have Akintoye Oyelakun, investment analyst at Quadras Asset Management, joining us on the program. Great to have you on the program. Good morning.
Yeah, good morning. Thanks for having me.
Yeah, so hello?
Are you able to hear me?
Oh, yes, I can hear you. I can hear you just great. So the global oil market has remained, resilient so far after suffering a dip following the comments of the U.S. government to raise output, given the inflationary pressures that the economy is currently facing. In your view, what has been the major driver of the rebound?
Yes, basically, there are several factors that we could attribute to the resilience in the oil sector. And one of it is the growing rate of vaccination, which has helped to keep the market very strong in terms of demand outlook. As vaccination continues to improve, we have seen more businesses being opened across countries, supporting demand. And despite the fact that the U.S. is a major producer, the largest producer of oil in the world, it has that potential to disrupt the market. We have seen that even after the comment that was made by Biden, we saw that there was a signing of there was the approval of the infrastructure bill, which was $1 trillion. So this kind of drove positive sentiment for the oil market, and we saw buying interest across oil commodities. And in addition to that, we have also seen major roles played by OPEC Plus cartel. OPEC has been able to agree with its members to continue to gradually return to the normal level of production after it has installed quotas starting from the peak of the pandemic. So we have seen OPEC playing a major role, despite the fact that it controls just below 40% of the market share. OPEC Plus has played a major role in ensuring that the oil market is not oversupplied, and we have seen oil ascending from as low as $15 per barrel to as high as $80 per barrel. So I'll say these factors are responsible for driving the demand and resilience in the oil sector.
All right, there are growing concerns that decisions at the ongoing 2021 United Nations Climate Conference, actually ending today, might impact financing for oil and gas projects. To what extent can the Petroleum Industry Act help Nigeria sufficiently, curb this possible impact?
Yeah, basically, when you look at the conference, it's dominated by advanced economies of the world. These are countries that are, very rich, and they have the power to impose, policies that could affect investment in the oil space. The issue of global, the greenhouse gas emission is not a new phenomenon. That's been there for a while now, and there has been more aggressive action taken to ensure that there's a reduction in the emission of greenhouse gases. This is going to really affect oil-dependent economies like Nigeria in the sense that if you look at our export base, Nigeria is largely dependent on oil, despite the fact that it contributes just a little to the GDP. The oil contributes less than 10% to Nigeria's GDP. So it's going to have a negative impact. However, looking at the fact that we are talking about the global economy now, there's a little that the PIA can do to reverse or to reduce the impact of this. But I think what Nigeria can focus on is tapping into the gas resources. Nigeria is rich in gas. In fact, when you look at Nigeria's gas reserve compared to the oil reserve, you will say Nigeria is gas rich and not oil rich. And given the fact that gas is less toxic to the atmosphere, I think that gas is going to outlive oil and other fossil fuel for maybe 50 to 100 years. And Nigeria could look at strengthening investment in that sector by driving competitive policy and making sure that the Nigerian business environment is one that allows business to thrive. So with these, if Nigeria could quickly switch to more dependence, more reliance on gas than oil, Nigeria will be able to withstand whatever change is going to happen, whatever impact is going to happen as a result of the decision that we made at the conference.
But interestingly, I see Germany is not really in full support of gas use. But going forward, let's see if other countries will actually join them, with that view. But recently, there was a report that the NNPC recorded a revenue deficit of 1.29 trillion naira within the 9 months of 2021 period, as the national oil company recorded an actual revenue of 2.44 trillion compared to a proposed annual revenue of about 4.98 trillion. What is responsible for this deficit?
Yeah, so basically, it's an oil company, the national oil company, so it's also dependent on the level of production that we can see in that space. I mean, since the emergence of pandemic, despite the fact that Nigeria's production has been said to be very low, we have seen the OPEC Plus cartel gradually reversing its decision to reduce supply. I mean, supply of oil drastically across among its members, and despite the reversal, Nigeria has not been able to go back to pre-pandemic levels. And despite the fact that it's just OPEC quota for Nigeria is 1.67 million barrels per day, Nigeria has continued to produce below this level because of issues around operational inefficiency. Excuse me, operational inefficiencies. I mean, this has really affected the ability of NNPC to meet its revenue target. And basically, if you look at the GDP, you will see the trend. Nigeria's oil GDP has contracted for maybe 3 to 4 quarters consecutively. Now, I mean, if you look at the GDP, the last GDP for Q2 shows over 12% contraction in production. So this has been the major factor why the NNPC has not been able to really achieve its target, despite the increase in oil price.
All right, and bringing it to the crypto market now, we see it's witnessed upbeat performance this week with Bitcoin and Ethereum reaching record highs. Is there any explanation as to the recent rally, despite the very high volatility we see in digital currency?
Yeah, basically, I mean, what has been supporting the cryptocurrency market has been high system liquidity. With the emergence of the pandemic, a lot of economies were supporting their, I mean, a lot of governments are supporting their economies with more system liquidity, and this has led to investors cherry picking on risky assets. Even equities market has been recording very strong gains. Even if you look at the advanced economy, even other markets, they have been rallying a lot this year. And it has been similar for the cryptocurrency market. Despite the fact that the Chinese government clamped down cryptocurrency activities, we saw that the US Fed has several times reiterated that it is not intending to halt the transactions on cryptocurrency. And this has kind of driven back the positive sentiment for the crypto market. And basically, we have seen sustained buying interest in that space. So I will attribute that performance in the crypto market to all these factors which I mentioned.
But is Bitcoin actually a good hedge against inflation, like in reality?
Well, I mean, if you look at it in the sense that if you look at the US market, for instance, the US has continued to report historic inflation numbers. And if you look at the crypto market performance, it has been quite bullish this year. It has outperformed the inflation numbers. And also, if you look at the fact that government instruments are not yielding as much as they used to, given the easy policy stance of the central banks across the world, this has led to investors looking for opportunity. However, if it has helped to surpass that beat inflation in terms of return. However, it still remains volatile, and anything could happen in that space.
Yeah, quite volatile. Well, let's look at yields. Now, following the conclusion of the Treasury bill auction on Wednesday, how would you describe the outcome, and what is the possible impact on the secondary fixed income market? Given a lot of investors have been on the sidelines to have more insight regarding direction of yields.
Yeah, so basically what we saw at the close of the auction was that the auction was oversubscribed and most demand went to the long end of the curve. And what we again saw was the stop rate for the long end trending lower again for the second consecutive time. And, investors pretty much watch closely what's happening around the money market space. And with the result of the auction, we're likely going to see some bullish sentiment resurfacing in the fixed income market generally. Already yesterday, we saw the bullish performance coming in. However, it is not still clear because, we are seeing mixed direction from the central bank in recent time. And investors will still be looking at the auctions that will take place in order to be able to decide effectively whether or not yields are going to be trending lower or not in the fixed income market.
All right, the equities market has been quite bullish so far this week. We saw the resurfacing of buying interest across bellwether stocks. What is your assessment of the positive, performance, and what are you expecting?
Yeah, so basically at the beginning of this week, we saw that the central bank approved the PSB license to telco giant Airtel and MTN. And I mean, looking at what these telco giants have done outside of Nigeria, I mean, investors were anticipating that there's going to be a lot, done in the Nigerian market. And basically, we saw a lot of demand for those stocks. And most of the gains that came into the market this week were from the telco giants, given their market size, and the level of demand that we saw. So we saw both Airtel and MTN gaining about 15% each, due to the buying interest in those two tickers. However, we also saw buying interest in other bellwether stocks. Although when you look at the results on Wednesday and Thursday, we saw some profit taking in. Some investors were exiting stocks due to the fact that, they'll be able to make some level of profit. So we saw some sell pressures on the market on Wednesday and Thursday. But overall, the market is still very bullish and it's likely going to close on a bullish note at the end of this week. But looking forward to next week, I think the performance is going to be mixed for stocks that have witnessed a lot of sell-offs like GT, Zenith. We should see some buying interest in those stocks. While for stocks that have made some profits, we are going to likely see some profit taking next week. So the performance is going to be mixed, but who wins will now depend on which is stronger, maybe the Bears or the Bulls.
Right. But looking at the performance this week, which stocks stood out for you?
Yeah, I think the stock that stood out for me has been MTN. MTN is a value stock, and a lot of analysts have a view that MTN is badly undervalued. And seeing this kind of news coming and investors taking position in it, I think people are recognizing the capacity of the stock to deliver a huge return for them. In both short and long run. So I would say MTN has stood out across all these stocks in the domestic bourse.
And what are you looking? What stocks do you see looking good for next week?
I think some banking stocks are attractive at the moment. Also, when you look at Jais Bank, the company has delivered very strong numbers, for since the beginning of the year, even before, even in 2020 when we had the pandemic. I think there's a lot of opportunities in Jais Bank. Also, Zenith Bank, despite the fact that it has posted a performance which is below what was generally expected. I think GT at this level is still a good buy for the long run, especially when you consider the level of dividend that GT Bank has declared in the long run now. So, if you expect that kind of dividend to be declared for full year 2021, it's a very attractive stock at the moment. Also, Zenith is also an attractive name when you look at it in terms of dividend, and also UBA. So I think all these stocks have a potential for accretion in the coming week.
All right, still looking at inflation hedges here. How strong is the equities market if you want to use it to hedge against inflation?
Yeah, so basically, equities market is very good for inflation hedging. However, for you to be able to tap into that, I would advise that as an investor, you look more of the long run. So if you are taking position in an equity instrument that are not undervalued, and you see a potential for it to appreciate significantly, maybe in the next 2 to 3 years, those kind of stocks in the long run outperform inflation. And I think that, looking at the level of yields that are being offered at the fixed income market at the moment, I think having an exposure to equities for a long run is going to prove positive for investors that can have that kind of investment strategy to position in fundamentally justified stocks, which are expected to continue to deliver strong numbers, in the long run. So I think, if investors are able to find fundamentally justified stocks for the long run, they'll be able to edge against inflation.
All right, Akintoye Oyelako, investment analyst at Quadras Asset Management. Thank you for joining us on the program this morning. Enjoy your weekend.
Yeah, you too. Thank you very much for having me.